Hello everyone. This is going to be a quick video on how I use inversion fair value gaps to increase the probability of silver bullet setups. So first, just to set the framework of this video, I'm sure most of you watching this are familiar with the 2022 model that ICT has taught, but we have the classic buy-side liquidity purge, and of course this is a example for a short setup. We have the liquidity purge, and then we have the market structure shift, so the displacement, and then the silver bullet 2022 model is the entry in this fair value gap targeting our sell side objective. Now, the main framework of why I add inversions to this is to reduce risk, and we have a couple examples of how inversions can help reduce this risk. So before we get into actual price action, this is a graphic of the inversion model. So it's the same thing. Our bias is bearish and we want delivery to this sell side objective. We have the buy side purged, the market structure shift, and the fair value gap. Now, instead of entering on this retracement to the fair value gap, we wait for an inversion fair value gap. Why do we do that? So ICT teaches that if we're going to enter on this fair value gap, your stop loss should be above this swing high here. Now, through my personal experience with the 2022 model and other traders that I speak with, one issue that they have is the amount of risk sometimes when you have large displacements and then retracements up to that premium of that price leg. So the inversions allow you to reduce that risk. Okay, so instead of getting short here on the retracement into this fair value gap, I require one more confirmation that this fair value gap is indeed rejecting price and that this BISI, right? So before it becomes an inversion, it is a BISI, a buy side imbalance, sell side inefficiency. So if we were bullish, it should support price. But since we're bearish, we want to see it fail. And once we see a candle close below, we enter on a retracement and target our sell side objective. So instead of having the stop loss above this swing high, we get confirmation that this is going to be resistance, the fair value gap, and then we get the inversion entry. And our stop loss instead is above this most recent swing high because we already came back to a premium. We already tapped into this fair value gap, and the inversion, the BISI becoming an inversion, once that BISI fails, it is the final confirmation that the algorithm is not respecting discount PD arrays. Okay, so the inversion is a great tool to reduce your risk as well as understand as one final confirmation that the algorithm is seeking sell side objectives. So let's get into some examples. This is the 1 minute chart, and all the examples will be on the 1 minute chart for this video. But this is the classic 2022 model. So what did we just talk about? We have the buy side purge, we have the market structure shift, and we have this large fair value gap here. Now, all the examples in this slide will be on NASDAQ. So as you can see, if we were to do the traditional 2022 model, we would enter on this fair value gap here, and our stop loss would have to be where? Above this swing high, right? So 33 handles is the risk, and it's a lot of risk in terms of points, and it's a lot of drawdown you would have to watch if you were to allow price, and if you were wrong and you were to get stopped out, right? The inversion is a great way to reduce this. So this is that actual setup from the previous slides in action here. So the normal 2022 model in this setup, like I've mentioned, is the 33 handle stop loss. Okay, so now let's go to the next slide and see how we can use the inversion model to make this trade more efficient in terms of risk. So instead of just getting short on this retracement into this large fair value gap, we want to wait and see, is price respecting it? Is it going to act as resistance, right? So here, when we come back into it, we are not entering. We are waiting to see a BISI form, okay? We want to see this BISI fail, displacement below it, close, and then we enter on a retracement into it here. So this candle here would be our entry, and our stop loss, what was previously 33 handles, is now cut down more than 50% to 15 handles. So your stop loss is above here. Why should this be safe? If our bearish bias is correct, this stop loss should be safe because we've already came up to rebalance this large fair value gap. We've already had our buy side liquidity purge, our market structure shift, and this large green candle is just an inducement candle, right? The purpose of them, and as a reminder, this is a 1 minute chart. So this is 1 minute of speed to the upside. The algorithm is going to want to do this to get anyone who thinks we're going to go up, take this high and expand above that high, to trap them here. Because humans, we're emotional creatures, right? We have to make a decision in this 1 minute candle, this strong move to the upside, that we're going to go long here. So it displaces up, but we don't chase this. Our bias is bearish. We want to target the sell side liquidity pool. So our final confirmation is just a closure below this inversion, and we enter on the retracement, and it reduces our stop, or our risk, in half to 15 handles. Okay. So another example, the 2022 model, same thought process. We come down and we return to this fair value gap, sweep these highs, but we leave our sell side liquidity pool. So our bias is still bearish because we have not gotten the sell side liquidity pool. So instead, again, of treating this fair value gap like traditional supply and demand is taught, I want to wait to see the reaction, right? I don't want to just have a limit here, and you can, this is just my experience, but I don't want to have a limit order here, right? Because I'd have to put my stop loss all the way up here, and they might want to dig it up into this fair value gap. Or if you get stopped out and you're wrong, it's large risks in terms of handles that you're taking on. So again, how do we reduce the risk? How do we make our trades more efficient with the inversion model? That's the same setup. We're still bearish. We come back to this inefficiency and sweep these highs here. All we're doing now is waiting to see if it respects this SIBI or if we expand above it. If we expand above it and continue upwards, there's no damage done, right? I didn't enter on this fair value gap. I'm waiting for the inversion model to come to fruition. As you can see, we reject out of the fair value gap. The BISI becomes an inversion. We enter there on the retracement into the inversion, and our risk is cut in half again to 12 handles, okay? So this inversion is the final confirmation that price is not respecting discount or bullish PD arrays, whatever you want to call it, okay? And you can see on the right here, we do get that sell side liquidity pool and target is met. Let's do one more example just to jam it in your guys' head so you guys really understand what I'm saying. This is a great example of large displacement, right? So we have this large fair value gap, and you can see the risk here, if you were to use the 2022 model on this fair value gap, would be 68 points. That's a lot of risk to take on with just a limit order here, okay? So you guys probably understand by now. Instead of getting short at this fair value gap, we're waiting to see a BISI form, displacement below it, closure below it, right? So we don't close below it here, so we're not entering there. We close below it here. Once we close below it here, we have a limit order set at the bottom of the inversion, and we're targeting our sell side liquidity pool. Again, you can see risk is cut in half to 34 points, and that is still a lot of risk. Of course, risk preference is based on your trading style and what you feel comfortable with. But in scenarios like this, I would have put a hard stop loss above there just in case I was wrong and we quickly displaced above. But if I saw a candle close above this inversion, I would just manually close out the trade because we're already in this SIBI. We've spent some time in here balancing this out, and then we displace lower. So we don't even want to see, best case scenario, price get to the high of this inversion fair value gap. Okay. So I hope you guys learned something. This was a good example of some of the trades that I tend to take, how I read price action, how the inversion is used as a confirmation tool, as well as a great tool to reduce risk. Guys, in the description, if you want to join our free Discord, make sure to hit that link and come trade with us. Come learn how we trade. Come show us how you trade. We'd love to have you guys, and thanks for watching. Bye-bye.